Welcome to Smart Life with Mr. P, where knowledge meets freedom. Let's unlock the future, one smart decision at a time. The evolution of money from barter to Bitcoin. Money. It's something we use every day. But have you ever stopped to think about what money really is? In its simplest form, money is a medium of exchange. It facilitates transactions and allows us to trade goods and services without the complexities of barter. Imagine a world without money. You'd have to find someone who not only wants what you have, but also has what you want. This is the essence of barter, and it's inherently inefficient. As civilizations developed, so did the concept of money. We moved from bartering goods to using precious metals like gold and silver. These early forms of money were valued for their scarcity and durability. They represented a store of value that could be easily transported and exchanged. The invention of paper money simplified transactions further. However, it also introduced a new element: trust. Paper money, unlike gold or silver, has no intrinsic value. Its worth is based solely on the promise of the issuing authority, typically a government or central bank. This brings us to the era of fiat currency. Fiat currency, a trust-based system. Fiat currency is the dominant form of money in the world today. It is backed by the government that issued it. Its value is derived from the government's decree that it is legal tender. Think of the US dollar, the euro, or the Japanese yen. These are all examples of fiat currencies. They are not backed by a physical commodity. Their value is based on the trust and confidence we place in the issuing governments. While fiat currency has its advantages, it also has inherent weaknesses. One of the most significant is its susceptibility to inflation. When governments print more money, the existing money supply is devalued. This means that your money buys less over time. Inflation erodes the purchasing power of your savings. It is a hidden tax that disproportionately affects those who hold cash savings. Another concern with fiat currency is its centralized control. Governments and central banks have significant power over the money supply. They can manipulate interest rates and print money at will. This centralized control can lead to economic instability and can even be used as a tool for political oppression. Fractional reserve banking, a house of cards. To further complicate matters, most modern economies operate on a system called fractional reserve banking. In this system, banks are only required to hold a fraction of their deposits in reserve. The rest can be lent out to generate profits. This practice of lending out more money than they hold in reserve is known as fractional reserve banking. While fractional reserve banking can stimulate economic growth by increasing the money supply, it also creates inherent risks. The most significant risk is a bank run. If depositors lose confidence in a bank and try to withdraw their money simultaneously, the bank may not have enough liquid assets to meet those demands. This can lead to bank failures and systemic financial crises. The 2008 financial crisis was a stark reminder of the fragility of the fractional reserve banking system. Excessive risk-taking by banks, coupled with lax regulations, led to a global financial meltdown. The crisis highlighted the need for a more stable and transparent financial system. Bitcoin, a decentralized digital currency. In the wake of the 2008 financial crisis, a new form of money emerged: Bitcoin. Created by the pseudonymous Satoshi Nakamoto, Bitcoin is a decentralized digital currency. This means it is not controlled by any government, bank, or financial institution. It operates on a global peer-to-peer network, allowing for direct transactions between users without the need for intermediaries. One of Bitcoin's key features is its limited supply. Unlike fiat currencies, which can be printed infinitely, Bitcoin has a fixed supply cap of 21 million coins. This scarcity is written into Bitcoin's code. It cannot be changed. This finite supply makes Bitcoin resistant to inflation. It gives it the characteristics of a deflationary asset. Another crucial aspect of Bitcoin is its decentralized nature. Transactions are recorded on a public ledger called the blockchain. This ledger is distributed across a network of computers. This makes it incredibly secure and resistant to censorship. No single entity can control or manipulate the Bitcoin network. Understanding blockchain, the technology behind Bitcoin. To understand Bitcoin, it's essential to understand the underlying technology blockchain. Imagine a digital ledger that records every single Bitcoin transaction ever made. This ledger is not stored in one place but is distributed across a network of computers around the world. This distributed ledger is the blockchain. When a Bitcoin transaction occurs, it is broadcast to the network of computers. These computers, known as nodes, verify the transaction and add it to a block. Each block contains a timestamp and a cryptographic link to the previous block, creating a chronological chain of blocks, hence the name blockchain. The blockchain ensures transparency and security. All transactions are permanently recorded and publicly verifiable. The cryptographic links between blocks make it virtually impossible to tamper with the blockchain. This makes Bitcoin a highly secure and transparent system. Bitcoin mining, securing the network. The process of verifying and adding new blocks to the blockchain is known as mining. Miners are specialized computers that compete to solve complex mathematical problems. The first miner to solve the problem adds the next block to the blockchain and is rewarded with newly created bitcoins. Bitcoin mining serves two crucial purposes. First, it validates and processes transactions, ensuring the integrity of the Bitcoin network. Second, it introduces new bitcoins into circulation following a predetermined schedule. The mining process is energy intensive, but it is essential for securing the Bitcoin network and maintaining its decentralized nature. The significance of cryptocurrencies: a paradigm shift. Bitcoin represents more than just a digital currency. It is a technological and societal paradigm shift. For the first time in history, we have a form of money that is not controlled by any government or financial institution. It operates independently, governed by algorithms and consensus among its users. The implications of this are far-reaching. Cryptocurrencies have the potential to revolutionize the way we think about and interact with money. They offer a more accessible, transparent, and secure financial system, one that empowers individuals and promotes financial inclusion, especially in developing countries where access to traditional banking is limited. Beyond Bitcoin, the underlying blockchain technology has the potential to disrupt various industries. From supply chain management to healthcare and beyond, blockchain offers a new way to store and manage data securely and transparently. Getting started with Bitcoin might seem daunting at first, but it's becoming increasingly user-friendly. Here's a simple guide for beginners. First, choose a Bitcoin wallet. A Bitcoin wallet is where you store your Bitcoins. There are various types of wallets available, each with its own security features and ease of use. Next, buy Bitcoin. You can buy Bitcoin through cryptocurrency exchanges. These platforms allow you to exchange fiat currency for Bitcoin. Then secure your Bitcoin. It's crucial to secure your Bitcoin wallet with a strong password and enable two-factor authentication. Remember that you are responsible for the security of your Bitcoin. Finally, start transacting. You can use your Bitcoin to make purchases online or send and receive Bitcoin to other users. While Bitcoin was the first cryptocurrency, it's no longer the only one. Thousands of cryptocurrencies exist, each with its own unique features and purpose. Ethereum, for example, is a blockchain platform that enables the creation of decentralized applications. Litecoin is a cryptocurrency that aims to be a faster and cheaper alternative to Bitcoin for everyday transactions. Navigating the vast and ever-evolving cryptocurrency landscape can be overwhelming. It's essential to do your research and understand the risks involved before investing in any cryptocurrency. Remember, the value of cryptocurrencies can be highly volatile. The emergence of Bitcoin and cryptocurrencies marks a significant turning point in the evolution of money. It challenges the traditional notions of finance and empowers individuals in unprecedented ways. Decentralization, transparency, and security are at the heart of this revolution. As we move towards a more digital and interconnected world, cryptocurrencies and blockchain technology have the potential to reshape the financial landscape. They offer a glimpse into a future where individuals have more control over their finances. A future where financial systems are more inclusive, transparent, and accessible to all. The world of cryptocurrency is rapidly evolving. It's an exciting time to learn, explore, and be part of this transformative journey. Whether you're a seasoned investor or a curious beginner, There's never been a better time to dive into the world of Bitcoin and cryptocurrencies. Educate yourself, stay informed, and embrace the possibilities that lie ahead. The future of money is here. The question is, are you ready to be a part of it? Disclaimer: this video is for educational and informational purposes only. It does not constitute financial, investment, legal, or tax advice. The views expressed are based on personal opinions and research, and are intended to help viewers understand the basic concepts of Bitcoin, cryptocurrency, and blockchain technology. Always do your own research and consult with a qualified professional before making any financial decisions or investments. Cryptocurrency investments carry risk and may not be suitable for everyone.